Good morning, everyone, and very much welcome to another Flash Friday. We're very much looking forward to take you through the news and developments in fintech from across the world. And today I have as my distinguished guest, Simon Cureton from Funding Options. Good morning, Simon.
Good morning, Don. Thank you very much for having me on the show today.
Yeah, great that you could join us this morning. We're very much looking forward to the conversation with you and to learn a bit more about where Funding Option currently is, what they're working on, and of course how basically the world around you is evolving and what your view is on that. For everyone who's tuning in right now, please check out the availability to type a comment below the stream, so you could actually ask questions if you want, and if it fits our story, we're more than happy to pick it up. But in any case, we really hope you enjoy our conversation and some insights about the developments in fintech. So Simon, Funding Options is, I think, a really important player to distribute, basically bring SMEs towards funding options, right? I think your name says it very nicely.
Indeed.
What's going on in that field? What are you currently working on?
As ever, there is an enormous amount going on. So in terms of where to start, so we recently launched Funding Cloud, which is a major step forward and what we believe is a meaningful disruption for the SME finance sector, both in the UK and when we launch it in the Netherlands for the Netherlands market as well. So for those of you that don't know, Funding Options is a platform that drives a marketplace for SME finance. So in a very short summary, we bring all of market in terms of businesses' finance options. We bring all of market to business owners in real time. And we power our platform using technology and data to effectively present solutions and make available opportunities to businesses in as efficient a way as we can possibly achieve. So Funding Cloud was launched at the beginning of April. What we're doing right now is really doubling down, making sure that we are extracting as much benefit from the platform as we can and that it's working exactly as we need it to. And then we have a host of additional strategic priorities that we're working on all the time. So we're not going to be resting on our laurels with Funding Cloud. We want to continually improve and continually help businesses in both the UK and the Dutch markets thrive.
Can you tell a bit about how the Funding Cloud, how that works? So for entrepreneurs, what kind of experience should they expect?
Yeah, so it's a completely new iteration of our platform that's been in the market or been in usage for a number of years. What we do is, so we set out originally to change our data strategy. So a couple of years ago, the strategy that we set out was that we wanted to be able to pull in from various different sources, be it the business owner themselves, putting their inputs in when they apply for finance online. So we obviously take those inputs in, but then we have a number of third-party partnerships that we utilize to pull in a very rich set of data from those providers. So this would be, for example, the likes of CreditSafe, Equifax from a credit bureau perspective, Dudil, Red Flag, Companies House. We have open banking seamlessly built into our journey. Long story short, as soon as the company has applied for finance through our platform, we have this huge, rich amount of data on that company. We then use algorithms to filter and triage the information that we've received and match those applications to the lender products and propositions and the lenders themselves. And then what Funding Cloud does is where we have lenders integrated into the platform, it will immediately send that information across to the lenders in real time, such that we can receive back an answer from those lenders. Effectively, it's the first platform of its kind to drive full digital underwriting in real time. So we have achieved, for example, from application to approval, a record time of just 20 seconds. So that is a business that was never known to the lender, fully underwritten, offer presented back to the customer through our platform.
Should we then see it also as in a way that you basically, as an entrepreneur, you want them to store relevant and current financial information with you on a continuous basis, that you take care of the distribution of that? Is that sort of how it will work more also going forward?
Yeah, very good question. So yes, that is definitely something that we're looking at. I think the nature of open banking, certainly how it works in the UK right now, is that when a customer gives you effectively permission to pull in their bank transaction information via open banking, I think you have a maximum of 90 days or 3 months before that permission effectively expires. So it does give you a window of opportunity to continue evaluate and look at the underlying bank transaction information. And certainly we see opportunities for, and monitoring sounds like a bad word, but for us to be able to work with our customers using their data to constantly present them with current information about their funding options, for example. Equally, you can use the bank transaction information to potentially offer other services which are relevant to the customer that potentially would add benefit to what they want to achieve.
So would you then also expect, because I think one of the things that's interesting to explore, which I don't think is in the market just yet, is whether you would actually be able to get let's say not a real credit line, but actually just get a credit assessment without even applying for a credit. So you're actually much better aware of your capabilities to get a loan with some sort of a pre-underwriting phase, basically, where you don't have to accept it just yet, but you can actually make the assessment on what's the availability should I need a credit.
Absolutely, and that's the power of data, which is why I'm such a huge advocate of data. I think the opportunity that it presents is incredible. I think also it's probably worth touching on, there is a perspective in the market. So some people are very sort of anti-data and anti-monitoring, or they have a perspective that data can be misused. I have a much more positive perspective. I mean, potentially I would be biased because, I work at funding options and that's what we want to do. But actually, if I'm a business owner, I would love to have not a constant flow, but the ability to continually assess the status of my company in relation to what funding options we have, particularly if you're a high growth or a fast growth company, or you're presented with an opportunity that comes out of the blue. To be able to have that kind of insight, I think actually is invaluable. And it means that the business has the ability to effectively achieve the best outcomes through information that can be provided by somebody like us.
Yeah, I think in any case, let's say if you look at sort of how fast the nature of businesses can change these days, I think we'll go to a much more real-time monitoring system anyway. Although I think we're not all ready just yet, right? So from a regulatory perspective, but also if you look at credit institutions, they're also not. They very often don't have, continuous monitoring built in. I think the standard is still, send me your annual figures, and we'll see if anything went really wrong last year. Which is, of course, not a really effective way to track potential risks. So do you actually see that moving forward towards? Do you see interesting experiments as well from the credit providers that they are also really keen on exploring together with you, perhaps that real-time data and monitoring perspective?
Yes, I mean, we have deep partnerships with the bureaus that we work with. We work with them very, very extensively and have done actually for a number of years. But we're seeing increasing innovation across the market. We're seeing a number of businesses make some very interesting moves. There's been a few acquisitions of late. So one I can think of, for example, would be Equifax acquiring AccountScore. We use AccountScore actually for our open banking solution. So I think everybody is realizing the direction of travel of the market. And I think, everybody knows that data is going to be key, and this ability to, as you say, constantly monitor and offer solutions. We've seen increasing digitization with COVID. So I think everybody's very much aware of that. Everything is, the digitization has accelerated. And again, I think that's a really, really beneficial thing. I think it's maybe too early to tell how things will turn out, but, we see a lot of movement, and I don't think that's going to slow down anytime soon. And there's a lot of collaboration as well amongst fintech players. So we're constantly talking to our colleagues or other fintechs, within our sector and outside of our sector, about the great things that they're doing. And any opportunity for us to disrupt, any opportunity for us to continually innovate again and offer beneficial services, we'll definitely take a look at it.
I think I can definitely understand that. And so where do you see, so what is the next thing that we could expect there? So I think, let's say open banking has brought a lot, right? So I think it allows you to unlock data that otherwise would be quite cumbersome to retrieve. But what would be the next thing? Would it be also to integrate bookkeeping systems, for example, or would you be part of a more an integrated financial system for SME entrepreneurs. I'm just curious about your view on it.
Yeah, absolutely. I mean, so open banking is relatively old hat, as you say, these days. Open finance is the new thing. And I think open finance does obviously present new opportunities with new data sources. You touch on a really interesting point because, and I was talking to somebody about this in a completely different context. We were talking about technology. So all of the different apps that you have on your phone. So I'm actually currently staying at a friend's house, and they use Amazon Echo and Alexa and all that kind of stuff.
Yep.
Back home where I am, we use Google. Somebody else will be using an Apple product. Everybody's treading on each other's toes. And we were just sort of talking about the need for an aggregator. And this is quite interesting because if you look at that in the context of what we do, so we're deeply ingrained within that finance or within the finance vertical.
Yeah.
And we offer a particular service at the moment. Now, we will be proliferating our offering. So we will be absolutely broadening the services that we offer to businesses. And that's going to happen very, very soon. And that for us is a real opportunity to, again, add value for our business customers, diversify, obviously, the channels, the commercial channels that we have. So that's fantastic. But as an aggregator, do we actually take it a step further with our lender partners? And we're often asked within the accounts or dashboards that we have as funding options that we offer our customers, do we actually show the dynamics of the loan? So how much of the loans are outstanding? How much has been paid down? All of the sort of basics around loan management. And it's not something we do right now, but actually that's definitely something that we could potentially do. Now, clearly we need to make sure we do that in the right way, but I think there's a real opportunity to almost turn a platform like funding options into sort of this aggregator service where businesses just go to the one destination and they can see much, much more about their affairs, if that's the right word.
Yeah, it sounds almost like complete cash management, right? So that you actually indeed you've got positive balances, you've got credits, and how do you manage the mix basically?
Yes, indeed. And we need to obviously plot the right path because we're in partnership with a number of parties. But it does present, I think, an interesting opportunity and definitely something that I think that will be explored more and more going forward.
Yep, that's a really interesting topic as well, and I think I would see much more integration there because indeed also as an entrepreneur myself, I'm also just keen on actually just entering a dashboard to manage it all instead of having to open all these different kind of app and trying to sort of figure out where the difference is, how do I make this all exactly. How do I complete the whole picture?
Yeah, like a one-stop shop, if you like.
Exactly. I think that's what a lot of people are looking for, and especially I think one topic I think will be keen to discuss with you as well is so the financial literacy of entrepreneurs, right? So I think there's still a lot of education to be done because obtaining credits is still a tough game for a lot of entrepreneurs, especially if you're not as financially savvy. Making projections, having a good idea of the risk in your own organization. Those are things that are not very familiar for everyone just yet. Do you see a role for yourself there as well?
Yeah, hugely. So I think that probably is almost the basis for a lot of what Funding Options did in its early days. So we have a huge amount of educational material that's available through our website, and I completely concur with you. If you look at the number of products that are out there today, so again, if you're a business owner, you're looking for finance, maybe you have a working capital need, or actually there's an opportunity that's been presented to you to purchase stock, and you've got to do it within a very short space of time. When you look at the products that are on offer, how do you know which one is best for your organization, for your particular situation? Yep. And that's where we aim to try to assist, try to take some of the pain out of the process, help to educate the customers. We've talked, obviously, on the call today, mainly around, everything digital, but we have a very firm commitment at Funding Options also to humans. Heaven forbid. We must not forget the humans, because the humans are the ones that are effectively plotting the innovation and, doing all of the coding and everything else that sits behind these great platforms and these great innovations that we see in the market. So what we want to do is to have this sort of perfect hybrid, if you like, of technology, data, and humans working in unison to deliver optimal outcomes to business owners. So that for us is very, very key. So there is a human element. If businesses come to us and they're looking for finance, absolutely they can speak to what we call a business finance specialist. That for us is very, very important. But education, yes. And our platform does, as I said, it does aim to take the pain, and it will present choices that are relevant to the businesses, and it will provide information behind those products. And as I said, if business owners want to validate that with a conversation with somebody, absolutely fine.
Yeah, but I think that's actually a really interesting perspective as well, because I see a lot of organizations struggle with this perspective, right? Because I think I actually was having a conversation about this last night as well, where we seem to think that from an efficiency perspective, we should just eradicate all humans in the process, go fully digital, because it seems like that's what customers want. But I think that there's one big misconception there, and that's, I think that all the processes that people can do themselves, they are willing to do themselves. But it doesn't mean that they have also things that they are not feeling capable of doing themselves. And that's exactly why they would really value a sparring partner, actually someone to really talk to them about it. And I think the one thing that's interesting in the financial industry, the traditional financial industry, I think they've actually try to make the sales channels cheaper and cheaper, where therefore there was no real sparring partner for customers anymore. Yeah. And so when people would actually come to a branch office, there would be no conversation other than selling of products. Yeah. And so it's actually, you see that the expectations have risen, but at the same time also the service level has gone down so much that it was a complete mismatch. But I still believe that people really need some kind of social comfort around their financial decisions as well, which humans can definitely bring.
It's a really delicate balance, and I completely agree with you. I was going to make a comment. People have seen, anybody who's seen the old Terminator movies with Skynet taking over. Be careful what you wish for. But just going back to this, how do you get the balance right between the humans and the technology? And I think there's been some brilliant innovation, and I love what some of the new sort of the neobanks are doing with their digital offerings. What you can do through an app these days is absolutely phenomenal. Just even from a security perspective, genuinely a few years ago, I was walking through an airport, and I'm not trying to plug anybody, but I have an account with every digital bank basically. So Monzo, Starling, Revolut, the lot. I tried N26, but then they pulled out of the UK. But hey, but I was walking through the airport. I was walking through the airport, and I suddenly got all these pings on my phone, and it was somebody who somehow had got my details through my Starling card, and they were trying to purchase XYZ in Dubai. And as I was walking through the airport, it was like transaction. And so the first thing I did, of course, was whatever the word is, I froze my card. But if I didn't have that capability, they would have just emptied my account. So they were testing it the first time. Oh, does it work? Does it not? So, I mean, that's just a very, very silly example. But going back to the point around humans, there's a lot of frustration, because if you bank with any one of these entities, the only way of interacting with them is through the app on a chat line, which sometimes is okay. There's a lot of situations where it doesn't work. And I've had my parents, for example, locked out of their digital account. Long story, but then they were desperately trying to sort this situation out, moving between countries. Absolute nightmare. Nightmare.
No, but you see there, indeed, that's also kind of a generational conflict there, I think, right? So I think a lot of young people are really keen on just using chat, and they feel completely comfortable with that. But there's a large portion of the population that's just not there yet. They would want to be able to speak to someone, at least on the phone, or be able to meet them somewhere. And I think that's also where we need to cater for, from a financial service perspective. At some point, you don't want to exclude that population, basically. Yeah. And so what if you, let's say, one thing I'm curious about as well, if you look at sort of the European, the UK versus the rest of Europe kind of perspective, I think, let's say, for example, in the Netherlands, we've discovered that there's still quite a big financing gap for SMEs, right? Yes. So that generally, if we talk about financial inclusion, everyone has access to basically everything, but we see that there's a real funding gap for SMEs, or at least the numbers appear like that. How do you see that evolve basically in the UK or on the continent from your perspective?
Yeah, so that's another really great question. So there's a huge funding gap in the UK as well. I think it's purported to be around £60 billion at the moment. Just one word of caution on the funding gap numbers, though. Just because a business requests finance or is looking for finance doesn't necessarily mean that they are in a position.
They should get it. No, I agree. Yeah.
So, it's anybody can ask for X number of millions of euros, for example. but you know, that is a genuine point. So whatever the funding gap numbers are, they're definitely overinflated. In the UK, so the UK is without question more mature in terms of the alternative finance sector. There is just quite simply much more competitive choice. And I think with that maturity as well, and I think probably, you know, this is an area you might want to touch on, but certainly in the Dutch market, you know, there's a lot of noise around interest rates, you know, the interest rates that are being charged by certain lenders. Yep. And there is a big difference between the lenders who have more lengthy terms on their loans, for example, so, you know, 2, 3, 4, 5 year term loans. That's one sort of set of lenders. Then you've got short-term lenders that tend to charge higher rates because it is shorter term, potentially in their eyes, higher risk. But in the UK, certainly it's greater maturity. You actually have some really good value of lending that's presented to customers. And actually, we've seen some of the alternative finance providers charge interest rates that are better than the banks. And that has actually been reasonably consistent from some of the bigger players.
How do you see that happening? Because I think one of the challenges, let's say there are a couple of challenges for alternative finance. So one is, of course, let's say operationally, I think alternative financiers are able to make the cost more efficient than banks can do, right? So I think that's, from an operational perspective, that's clear. But then on the funding rate, they're generally in trouble because they can't, you know, get money for free from the ECB. So they would actually have to get investors on board that would actually require a return, which would already incur them to a higher funding rate and therefore higher funding cost for the borrowers as well. How do you see that they are able to get below that?
Yeah, so I mean, there are particular examples, and I will give a couple of examples actually. So before I actually worked at Funding Options, I worked for a company called ESME Loans, and I was one of the founder members of that business, and we set that business up from scratch. It's an alternative finance provider wholly owned by RBS or NatWest. Unfortunately, that business is now being closed down because I think NatWest has far too much exposure to SMEs. But in any case, the reason why they could charge better rates was because they were funded by the bank directly. So they had access to the bank's capital. That was one thing. Another player may be Funding Circle, for example, who has the scale whereby actually they can borrow at very advantageous rates. But this is one of my favorite subjects, also being sort of my least favorite subject, because I think it's an absolute travesty that the alternative finance providers are not given access to the same or equivalent borrowing opportunities to the banks. An absolute travesty. And in the UK right now, that is one of the single biggest issues that is challenging the alternative finance sector. The other thing that we've started talking about in the UK is, why is it called alternative? Yeah. Some of these lenders have been around for years. And they genuinely deserve the respect that their business model's success and what they're doing for the economy has done. They deserve that respect. And again, I would single out the likes of Funding Circle, iWalker, a whole load of other players, Market Finance. You know, there's some brilliant lenders out there that are really trying to innovate. They're really trying to bring something to the UK economy, to the European economies, and they just don't have access to the term funding scheme in the UK. And it's something we lobbied for in Q2 last year, as soon as COVID hit. You know, that is when you needed to bring in all of the lender community, all of it, not just the banks, all of it. And it didn't happen. A year on, nothing has changed. And that's
you see, indeed, I think some were included in the guarantee schemes, but indeed you don't see the funding rates change, right? So I think indeed that they're part of the government program to a certain extent, but not completely getting access to the same level of funding cost.
If they had access to the same level of funding cost, they wouldn't need necessarily the government schemes, which would actually take the pressure off the government to be backing these schemes. So it's almost like shooting yourself in the foot. That's my personal view. So, you know, you have a number of lenders right now in the UK that have no product in the market, genuinely no product today, because they aren't accredited for the RLS scheme, which, to be quite honest, has been not well handled. My view, or Funding Options view, should I say. So they have no product in the market because they also can't get access to capital. Nobody's willing to provide them with the capital unless they're lending through a government-backed scheme. So it's this 22 where they have to wait for accreditation. They can't borrow the capital or get access to the capital. So right now they are out of the market, and I'm talking big names.
Wow, yeah, that's really a shame.
Yeah, it's to the detriment of the UK economy, absolutely, and to the detriment of UK SMEs. And why people don't listen, I don't know. But in the Netherlands, slightly different story, certainly in terms of what we do, because actually the lenders that we're working with, none of them are utilising, well, they may be utilizing the government schemes elsewhere, but the lending that we are helping facilitate for Dutch businesses is actually all through the regular products that are issued by Dutch lenders. And what has been fantastic, in my opinion, is the consistency that the Dutch lenders have offered to the economy. We've seen a couple of fluctuations, but it's nowhere near been sort of the roller coaster ride that we've seen in the UK. And, you know, I guess the other point I should make is the UK government has done an incredible amount. So they should be lauded for what they've done in terms of the government schemes and things like this. But there's certain facets like the term funding scheme and giving effectively equality to the broader lender community that they've just missed, that would have actually made things exponentially better. So that's challenging right now.
So regardless, because I think at first they made an important move by actually forcing anyone who basically refuses a credit to direct towards alternatives, which was, I think, a really, really important step to take, right, to push the market forward. But then indeed, so now you actually see that last year that basically went into a reverse. By the way, I think also that branding part is, I think, really interesting as well. What you mentioned, that, you know, why is it called alternative? Because it might actually make people feel that they're not in the mainstream place, but in the fringes, right, of the lending market. The same is a bit like with the term shadow banking, which also makes you feel that you're not in the place, in the sunny place, right?
Exactly. It has negative connotations.
So what should we call it? Is it just sort of lending in general? Because it is good to I think also universally have a good language for it, right? I think alternative has also been very comfortable sometimes to say, you know, the non-banks. How do we capture them all together?
Yeah, maybe. I mean, it might be a bit. I mean, you can call it whatever you want, but, you know, digital lending, new wave lending, hard to say. But there's definitely, you know, it needs to be embraced because, you know, and actually the fintechs, you know, the challengers, the alternative finance providers, the neos. Actually, it's you know, we work closely with the banks as well. So the banks aren't bad in any way, shape, or form. But you want a level playing field. You know, when you're looking at the economy and what needs to be done, you really want to bring all of the innovative providers, the ones that have this capability to distribute at pace with incredible technology and data driven insights behind it. You want to harness that. You don't want to push it away.
No, exactly.
Inadvertently, we're in the latter camp.
No, exactly. So on that note, I think it's really interesting to also look at that collaboration, right? Because I think we've been talking also already for 5 years or more about how banks could potentially also just be a distributor of these digital lenders, right? And it makes a lot of sense because currently, I mean, what they do is they do out lending through an inefficient operational process, and then once they've got a package on their balance sheet, they try to sell it again, right? So I would say, you know, work with digital lenders. That's a shortcut to achieve the same goal.
Yeah, absolutely.
Do you see that happening? Do you believe that's going to happen anywhere in the near future?
Yes, I do actually. I think you will see increasing collaboration, and I think, you know, the banks get it, and the leaders, you know, within the banks, I think they're starting to sort of get it a lot more, and they know they need to come up to speed very, very rapidly. Interesting, I think in the Dutch market, our partnership with ING is a very interesting one. So we partnered with ING and launched our proposition in the Dutch market at the beginning of 2019. So Q1 2019 was when we launched, and then we've scaled up ever since. And, you know, we've certainly really enjoyed that partnership and really enjoyed figuring out, shall we say, the dynamics of the Dutch market. And the Dutch team at Funding Options is doing an incredible job to help support Dutch businesses. The basis of the partnership is what we call our alternative yes. So it's very, I think, you know, there will be businesses potentially who've tuned in and listening to this, and they will agree. You know, sometimes the banks give a pretty cold message to businesses if they can't lend to them. And what we effectively say to the banks is, well, look, instead of just saying a cold, hard no and issuing an email or a letter or a phone call that says, you know, no, sorry, bye. Why not say, you know, on this occasion, you know, XYZ Bank, we can't help you. However, we're partnered with Funding Options who can offer you access to an additional sort of 200 plus lenders across the broad market, and they can potentially help you with your goals. And that's what we call our alternative yes. And that's working really, really well. So we have a digital handoff with ING. And we have been able to fund businesses that the bank has not been able to fund. And there's some real success stories there. And so actually that is a really good collaboration between a bank and a fintech. And for me, that is only again to the betterment of Dutch businesses if we can offer that avenue instead of just that cold no, go away, search up business loans on Google and try and find a solution yourselves. That's when I think the collaboration really, really works.
Yeah, I think that sounds great. I think that's for at least for entrepreneurs, that's also quite a big relief. I think to not be sent away, but actually be helped towards the next best option, basically, that's out there.
Yep, absolutely.
And so maybe I think we almost have to wrap it up, but time flies. So how about sort of developments in the UK? I mean, I think we've seen that there were some developments recently between the UK and the EU. How do you see the market evolve? Because I think the fintech in the UK is going to remain fairly strong. And you see interesting developments as well, like, for example, JP Morgan buying Nutmeg, for example, to also focus more on the UK. So there's a lot going on still. What's your perspective on developments there?
Yeah, look, increasing competition, as you say, new entrants into the market. I think it's a very interesting play by JP Morgan. They're an absolute powerhouse on the global stage, and I dare say, as and when they launch properly in the UK, I think that there will be a compelling proposition that sits behind it. From our perspective, we want to maintain very strong links with the EU. I hope that there is continued cooperation. I think Brexit, it is what it is. We now have to deal with it. It's in place. It has challenged the economy. I think it's challenged both Europe and the UK. But we're not seeing any slowdown in innovation. We're not seeing any slowdown in investment. And long may that continue. And I think there's still a huge opportunity for UK fintechs, the UK financial services and SME finance sector to collaborate and work very closely with our European partners. And I think that will, again, it's really important for both parties that we continue to do so.
No, I fully agree. I think that's also the desire is, I think, just as big here on the side of the continent. I mean, we always felt like good friends, and let's keep it that way and keep on collaborating indeed. So thank you very much, Simon, for sharing your views today. I think it was really wonderful to get your perspective on the alternative finance market, or actually the digital finance market, we should say, of course, not alternative anymore. So we'll keep that up. But thanks for joining us.
Thank you for having me, and thanks everybody. Have a great Friday and weekend.
Yeah, thanks everyone. Indeed, enjoy your weekend, and looking forward to speak to you again next Friday for our last Flash Friday before a little summer break. Enjoy your day and weekend for now. Speak to you soon. Bye-bye.